Get on board Nandita Parker. She is Managing Director with Karma Capital. Nandita, fantastic to have you back. Thank you for joining us. Nandita, if you look at the screen, the indices are at an all-time high, at least in
Thank
India.
you. It's good to be here.
Right. It's our pleasure as well. I mean, the indices are at an all-time high, Nandita, in India. The screen is telling you that it is, bulls are in a commanding position. But somehow, if you look at the sense on the street, the level of participation, the leverage commitment by HNI traders and by traders, it looks like a bear. It looks like a bull market, but does not feel like a bull market.
I'm sure that will change, and very soon. I think in the early stages, there's always a fair deal of skepticism on whether we have crossed and really done away with the ills of the past. I think if you step back and look at 2018, it was a very, very challenging year for Indian equities. So I'm not surprised that the bulls are not gaining the traction that they have and potential to gain this year. I do believe that so much of the global as well as domestic headwinds that India faced in 2018 are reversing, are in the process of correction, that this will be a very, very strong year for Indian equities. We do have a big event ahead of us, and I think that some amount of caution is warranted, given that elections are around the corner. But having said that, I think that it's just a matter of time when the rally broad bases even more. Because I think the more important things to focus on are the fact that globally, in the developed space, there is a slowdown. Oil prices are heading down. It seems to be a weak dollar trade ahead of us, and that's what's fueling these flows into emerging markets. India has been lagging behind, but it's trying to play catch up, and the flows in March are clearly showing that. So I think we have the makings of a very, very solid scenario for the next 5 years. And I would venture to say that if this government comes back, there will be a fair amount of continuity, and that will be something that foreign investors will look at very closely and provide the impetus for the next leg.
So before we talk about the next 5 years, I'll roll it back to the last 5 years. The current administration has enjoyed majority on the floor of the parliament. Yet earnings recovery, at least at the micro level, have not happened. Maybe it is because of GST, demonetization, IL&FS, crude, whatever may be the reason, earnings recovery has not moved as per the script. So some would argue that if the current administration comes back into power, what will change?
Okay, so there's a number of things that I think people are not taking account of. One is just from a corporate earnings standpoint. One big change is what's going to happen to the corporate banking sector and the loan growth there. So the earnings in corporate banks is scheduled to recover very sharply in FY20. The public sector banks have put their NPL accretion behind them, at least the pace of NPL accretion. The provisioning will be much lower, and so on. And so they're coming back into the fray and supporting the whole earnings growth story for FY20. Now, in terms of the government, I don't want to sound political, but the fact of the matter is there's something to be said for continuity. And the fact that if this government comes back, they will hit the road running. There will not be much delays in terms of what they want to do next. I think the market will be very watchful of what they do in the first 100 years, the kind of budget that they deliver in July. And I think particularly foreign investors will look at what they do with tax policy. I think this is one issue that really needs to be addressed and make a much more consistent tax policy. Well, if you look at corporate taxes, for example. The finance minister had promised a reduction in corporate tax rates. There is possibly some room to do that going forward. Secondly, the capital gains tax. It's all over the place when it comes to FPIs, alternative investment funds, individual investors, so there is a lot of room to go there in terms of making a correction. So I think that infrastructure development, there is potential to really step on it. In terms of doing that, the Niti Aayog has set out their target for 75 years of Indian independence and what they want to achieve for the next 5 years. So I think there is a lot that this government will be able to accomplish once these elections are behind us and once the whole political compulsions are behind us.
But Nandita,
at least I'm very hopeful that we'll see some activity there.
Yeah, we're all hoping for that, aren't we? But Nandita, so you're saying that, with regards to the FII flows, a lot is subject to whether or not the current administration comes back to power, right?
Well, I'm not saying that it's dependent on the current administration coming to power exactly. What I'm saying is that if there is continuity, there will be a very straightforward case for an acceleration in flows. If there isn't, then we obviously have to wait and see what kind of government is formed. But if you look at the macro picture, interest rates are headed down, inflation is benign, oil is a tailwind instead of a headwind. The Federal Reserve has stopped raising rates and in fact will stop removing liquidity from the system. All these are very, very big factors which will drive equities globally and especially emerging markets. India in the past has been a poster child of the emerging market world, and I think we have our ducks lined up here for a very solid year.
Nandita, just about everyone was very gung-ho on the consumption theme as a whole last year. Now with an acknowledgement of a slowdown coming in demand, how are you assessing the potential for the consumption space as a whole?
Okay, so I mean there are aspects of it which are mature, and then there are parts of it which are emerging. So for example, the whole Ayurveda, natural wellness area is certainly a fast growing part of consumption, and we're very excited about that. There's retail, which I'm very positive on, whether it's brick and mortar brands or e-commerce, and with it the whole supply chain build out, which will lead to more opportunities on the logistics side. We have the dedicated freight corridor coming in 2 years, and that will make things more efficient for the supply chains as well as for manufacturing. So I think there's a lot to look forward to, even on the consumption side.
Okay, where do you think there is scope to be made money to be made within the consumption space, Nandita, specifically because that's the engine theme for Indian economy? And when you say that you like brick and mortars and such themes, where do you think in terms of specifics here, would you be more bullish on staples? Would you be more bullish on discretionary? Do you think India is all about betting on the rural class or the middle class? Can you be slightly more specific on that?
So as I mentioned, we are betting on both retail as well as consumer discretionary. Media is a theme that we like very much. I think there's a lot of exciting stuff happening there, yeah, so I think that we tend to be value investors, so we're not going to bid up companies which have shown growth in the past 2 years. We're not about to pay at 45 a multiple. We tend to be value pickers, and we think that there are large swaths of the market, maybe in the small and mid cap space, where growth is ahead of us. It could be led by, as I said, lower interest rates, stimulation of the housing demand, on the financial side, whether it's insurance sector, corporate-facing banks, so on. So I think there are, pockets of growth. I tend to not do thematic investing. I tend to look at, where are the values that are emerging, special situations, value unlocking because of, corporate events and so on. So, I'm finding plenty of opportunities.
It's always very refreshing to get a bullish voice, and I'm glad that, you've been very vocal about it. Are you hunting for some opportunities in good old NBFCs? That's a bombed out space. I mean, a year ago, everyone thought that nothing could go wrong for NBFC as a category and they will only rise. Now the view is that NBFCs could go only one way, which is down and down and down and down.
I mean, I think the market always goes from one extreme to the other, right? So yeah, I think there is room in the NBFC space as well. I'm sorry I can't give you specifics because in the past few months we have been picking one particular NBFC that we like very much, and in fact in the last month it has rallied about 30% or so. So I think that that view is probably a little dated as of a month ago, and things are looking up. I think you have to be very clear on what you're buying and why you're paying a certain price for it. So you have to say, okay, what is so unique about it? What is sustainable about their business model? And do they have the liquidity to ride out this very difficult time? What are they doing about growth? And I think what you're going to see is in the short term, obviously growth is a challenge, but if you look further down, and you look at the parameters of, what's unique about this NBFC, and can a bank replace this NBFC? I think that's the type of discussion you need to have, because the NBFCs do reach the last mile. Yes, they're getting squeezed on the margins right now, but I think that going forward, you could expect some of them to do reasonably well.
Yes, Nandita, other than financials as well as consumption, are you finding these special situations that are of interest to you?
Absolutely, we are. And it's just across the board. It could be in the healthcare space. It could be in oil and gas, real estate. It can be just a whole host of companies that we think that once the liquidity situation improves further, and once we see clarity, I think a number of situations that we own are going to give us a very good upside for the next couple of years. I'm sorry I can't be more specific than that.
But we've definitely gotten a flavor, Nandita, nonetheless, as to what exactly you're liking in this current market, as well as FI flows. And of course, it's been a pleasure. So thank you so much for taking time out and joining in.